What did China's largest tech company just reported? This is what we're going to go through in today's video. So full disclosure, I do have an existing position in my personal portfolio in Tencent Holdings, and in fact, it's the second largest, sitting at right around 18%. So the last time I actually talked about Tencent's earnings was roughly 2 quarters ago, around March of this year, where they reported Q4 of the entire financial year 2023. And this was actually the first slide of the presentation back then. And as you can see, the founder and CEO of Tencent Holdings, which is Ma Huateng, not being extremely expressive, because over the last year or so, they have actually clocked in a negative 23% in terms of share performance. But over the last 6 months or so, evidently he's a lot brighter because they've clocked in around 31% in terms of share performance, and it has been a rather eventful last 6 months. So what exactly happened? This is essentially the overview of the most recent quarter. And I'm not going to adopt the approach where I'm just going to read off some numbers telling you that, total revenue of Tencent grew from 149 billion to 161 billion RMB, plus 8% year on year. What does these numbers even mean? So we have to look at it from an overall trend perspective to give you a bit more of a flavor and appreciation of how Tencent is basically growing some of these numbers, what we should look out for. And this is my own Excel tracking sheet where I basically populate all the numbers across the last 4 years of Tencent, and to basically give you a flavor in terms of the growth rate, how they've been performing, the individual business verticals, and more importantly, to give you a more granular breakdown and appreciation. So of course, you don't have to do it on your own. All you have to do is probably smash subscribe so that I can give you more timely updates and to basically share with you my own analysis. This is 2 quarters back, and I've updated the 2 most recent quarter on the most right hand side. So I do understand that this might look a little bit overwhelming. What does the green bars mean? What does the red cells mean? How has Tencent performed over the last quarter or so? Is this a good earnings? Is this a bad earnings? So let's break it down line by line. If you strip away every single other line items and just look at top line revenue growth rates, you can see that there's some sort of a cyclical movement in Tencent's revenue growth. And truth be told, if you were to superimpose the chart patterns onto how Tencent has been growing its revenue, you can see that it's a very telling issue where back in 2022, they have been underperforming, and in fact, they have actually underwent 2 quarters of negative growth rates. Fortunately, for long-term shareholders that was able to brace through the storm and to look through this entire short-term headwind where China was not exactly in the best place back in 2022, you can see that we are slowly turning out of this down cycle, and we are slowly re-accelerating our growth rates, albeit not extremely exciting growth rates compared to the 2020 or 2021 numbers of 20%, but still great improvements to the high single digits and even the low double digits. Now, moving to the breakdown of its largest revenue contributor is actually value-added services, or VAS for short. So in this particular category, there's 3 subcategories, namely the domestic games, international games, and social network. And of course, numbers don't lie. So let's try to zero in our focus to the gaming division of Tencent, both domestic and international. And you can see that in 2022, when we talk about the overall revenue growth rate clocking in some sort of a negative growth, was mostly because of the negative contribution of the gaming arm itself. And just to jolt your memory a little, I think 2022, not only was it a slow macroeconomic environment for China, I think the regulators in general has adopted a rather combative stance to the entire gaming industry players. And that was when they started introducing regulations like restrictions to how much minors can play computer games. And this is a stark contrast when compared to their international growth rate that is still chugging along healthily. But however you spin it, the domestic arm still contributes a large part of Tencent's gaming revenue. So if the domestic arm is going to take a hit because of whatever reasons, whether is it from a regulatory requirement or whether is it from a consumer point of view, they're not happy playing Tencent's games anymore, that's when you can see that they basically take a huge hit. But I think in the latest quarter alone, Tencent has finally managed to pull through with their gaming arm. And despite the K-drama-like environment with the government and the regulators, you can see that in the most recent earnings quarter, in the earnings transcript alone, I think Wall Street analysts have been pretty excited as well. So the keyword game was actually mentioned 134 times, while DNF and Dungeon and Fighter, which is their most recent blockbuster release, it was mentioned 24 times. And there were many concerns around whether the gross receipts received by this new title was sustainable, whether Tencent's management team was able to telegraph the profitability of this new title, etc., etc. But I think the general mood in the earnings transcript was that everybody was excited. Tencent's gaming arm has finally turned over a new chapter. We are not looking at these sort of negative growth rates or even flat growth rates, and we are looking at some sort of revival. And as Tencent is reviving its gaming division, I'm also reviving my Substack newsletter. Link is in the description below, where I will be sending out a fortnightly newsletter to outline my investing thoughts on the market, and maybe even some interesting resource that I came across and I thought would be beneficial to you. Now, if we don't move on to the other two business segments, which is online advertising and fintech, I think online ads, even though it's decelerating, it's still growing. Now, in terms of fintech and consumption, they are slowing down significantly. We are looking at very low single-digit growth rates right now, and there is more discussion and more color later on as well. But I think in general, you can see that there's a lot of focus in the most recent quarter on the gaming division. We are all excited about the revival of domestic gaming revenue. But that said, I think the macro environment is still weighing down quite heavily, both on the online advertising and also the fintech space, which also contribute quite significantly to Tencent's overall revenue. Now, in terms of their bottom line overview, I think everything is still trending in the right direction. We are still looking in terms of expansion in gross margins. And also more importantly, in terms of their balance sheet strength, cash has grew more than 12% year on year. Debt has actually went down negative 3%. And I think, like I always echo, for most big tech Chinese counterparts, they have one of the strongest balance sheet out there. We don't have to be very worried about whether they're going to go bankrupt or not. But that said, I think it's also true, on the other hand, for many of these tech juggernauts, that they're trying to be more conservative and they're conserving a lot more cash. They're being a lot more prudent in terms of their investing activities as well. So you can see it's just a general mood, general slowdown in the Chinese economy. And when we look at our favorite metric, which is free cash flow, despite capital expenditure increasing exponentially, they do bring in quite a bit of extra operating cash flow, which then translates to a very healthy growth in free cash flow. If I'm not wrong, I think Tencent annually has been producing roughly 25 to 30 billion USD in free cash flow. So that's the number that we are probably expecting as well for 2024, barring any existential or unforeseen circumstances. So we are right on track for that. Now, if we look at it in terms of their investment portfolio, which was declared at the bottom, you can see that based on 30th June 2024, the fair value of their investee companies were 565 billion RMB, and for their unlisted investments, it's around 327 billion RMB. So I took the liberty to backtrack the last 8 quarters to really understand how their investment portfolio is doing. And you can see that despite giving out the special dividends of Meituan back in Q4 of 2022, so the fair value of the listed part of Tencent's investment portfolio has kind of grew back in size to its peak valuation of $585 billion. And the carrying book value of unlisted, because there's no market pricing mechanism, you can see that they basically went nowhere. But largely speaking, Tencent's overall investment portfolio is still a large part of the entire enterprise value of Tencent today. One analyst was asking whether it's self-sustaining in nature, and I think the chief strategy officer did give out a disclosure saying that in the second quarter of this year, the divestitures were substantially in excess of our gross new investments. So if you take the divestitures plus dividends received plus funds distribution received, then it was 50% greater than the capital we deployed in new investments. And I think it's kind of echoing the same sentiments that I've shared previously or alluded previously. Many of these tech juggernauts have been a lot more conservative over the last few quarters, and they're not spending as aggressively, they're not investing as aggressively. And yes, in terms of self-sustenance, they're not necessarily putting in a lot more capital, but more so many of these distributions back to them as shareholders. This is probably just organic growth in terms of valuations of their investment pot. So John, who's the CFO, also shared that in terms of the share of profit from their associates on a non-GAAP basis, it actually increased from 3.9 billion a year ago to 9 billion due to the contribution from associates like Pinduoduo and to a lesser extent Kuaishou and Epic. I think actually Pinduoduo is the largest contributor to why there's such a huge increase in terms of earnings and distributions, etc. Pinduoduo has just been killing it. But anyhow, moving on to what Tencent has said about the general macro environment in China today. Online ads actually grew by 19%, driven by an increase in ad spend from most categories, particularly games, e-commerce, and education. And the deceleration in consumption spending in China is actually a headwind to advertising CPM and to brand advertising and ad network trends. And James, who's the Chief Strategy Officer, said that, and I kind of paraphrase and quote him, the ads in Tencent actually did okay because of the higher CPM and higher click-through rate due to the closed-loop system. Long story short, the WeChat ecosystem is able to have the full suite of analytics, why a customer clicked, why a customer buy, what's the consumption pattern. That's why it's a closed-loop system. And because of this inherent characteristics of their product offering, they are able to charge a higher CPM because of the better click-through rate and the better understanding of the consumers on their platform itself. They actually didn't increase incremental ad inventory. So for those of you who are invested in other ad companies like Meta, you know that one of the levers of increasing profitability or revenue is to basically just spam you with ads. And if they want to increase revenue by 10%, they can just increase ad impressions by 10%. They're basically just saying that, hey, growth would be a lot better if macro environment was better and if we just dial up the ad inventory. In other words, they can do much more but are choosing not to for now. From another perspective, they did say that the number of commercial payment transactions continue to increase at a healthy rate year on year. But the average value per payment transaction actually declined year on year due to slow consumer spending. And they do expect the commercial payments revenue to improve once consumer spending pick up. So wealth management revenue also grew at double digits due to the increase in number of users and also in aggregate customer assets, as most people in China today tend to save more and spend less. So on the credit front, we do see consumers wanting to borrow more, but revenue actually decreased because Tencent is proactively controlling what they lend out, tightening the credit when the macro is weak. And it is also not as if people don't have money, but they choose to save rather than spend. So we should over time see a recovery in consumer consumption. Not a matter of whether, but a matter of when. Sort of have to wait a little bit to see when the inducive policy should start yielding results, specifically from a government standpoint. If you can guess what Tencent's management team is trying to say, it can be summarized in 4 words. Don't scare, just wait. Now, a little bit more in terms of how they look at the gaming arm and the entire AI infrastructure and hype in China today. So they have been on a rodeo with the government stance on gaming. On one hand, they don't really like it. There's some sort of a distaste with regulators. On the other hand, they're not necessarily just banning it outright. So we have also recently got supportive comments from the State Council, and one of the analysts asked Tencent, will that change any of the company's R&D deployment? And basically, the company's management just say that, don't waste your time reading too much into it. It's a long game, and we have been making strategic investments along the way. Now, moving on to the AI segment, renting out GPUs to other companies with AI requirements have been a very big business. In China, the same trend is evident, but to a lesser extent because you don't have the same multitude of extremely well-funded startups trying to build LLMs on their own in China. So small companies are capitalized for $1 or $2 billion, not 10 or 20 or even $90 billion, unlike the US VC-funded startups. So long story short, the Chinese AI market is not big and matured enough yet, so not much money to be reaped. And I guess this kind of paved the way in terms of investors' expectations of the cloud segment itself. And this was my old conclusion 2 quarters back, whether is Tencent a buy or not. So there's much lesser disdain for Tencent compared to Baba because they are producing much more reasonable results, all things considered. Whether is it geopolitics, whether is it a macroeconomic environment. I think when you look at results like these, there's not much to complain, to be very frank. And they're probably still killing it with their WeChat engine, which is the main economic mode of the Tencent business itself. I think the mode is still as strong as ever. 2 quarters back, actually the biggest cloud of worry is their domestic arm. And there seems to be some sort of a misstep there, and regulation enforcement is in the draft, which is in the horizon. But that's it. I think over the last quarter or so, we can see some sort of a very strong recovery, both on an international front and also in the domestic front. So I think Tencent, it's poised to just chug along. They are doing very well. They have been executing on all fronts. There are some sort of blips over the last 3 years or so, but yeah, I think they have been doing well. They are continuing to do well, but valuations is probably debatable amongst investors on whether it's fair value or it's not fair value. To me, if you actually do adopt a very long-term horizon, I think Tencent is probably still extremely undervalued, especially so when we are operating in this sort of macroeconomic environment. And I think last but not least, the playbook for most of the huge Chinese companies today is to lay low, lay flat, lay humble. Make sure to read the 5-year plan and to align your interests with the government and to engineer confidence again by issuing dividends and to do buybacks. I think on 3 of these fronts, Tencent has been doing a fantastically good job, and they'll just probably continue doing Tencent things, which is to execute quietly, continue producing growth rates, continue buying back shares. So with that, feel free to leave in the comment section down below on whether you are excited about Tencent's gaming revival, and I'll see you guys in the next video. But more importantly, I'll finally see you guys on the moon.